Hi, everyone. This is Dan Moorhead from Pantera. Thanks for joining the call. We host these calls once a month to help the community talk about topics that are timely, things we believe strongly in. Sometimes they're really generic calls about the industry as a whole, and sometimes we want to take a deep dive. This is a very special one, taking a deep dive into Ethereum with Ethereum co-founder Joe Lubin. It's a fantastic opportunity for us. I was just thinking about the early days of this industry and meeting Vitalik when he was a 17-year-old reporter for Bitcoin magazine. Joe and I went to Princeton together. He was good friends with some of my friends, and the ecosystem's evolved a great deal since then. One of the earliest people to work on Ethereum is our co-CIO, Joey Krug. So he's going to host most of the call and get into the topic of why we're so bullish on Ethereum. Wanted to make sure you all knew you can use the Q&A box down at the bottom, and our investment team will answer questions live as we go. Hopefully we'll answer most of them during the session, but we're happy to stay on the call after the end to go into as many questions as remain unanswered. And with that, I'll hand it over to Joey Krug to introduce my friend Joe.
Thanks, Dan. So first, what we're going to do is we're going to give a quick presentation kind of from our view on why we think Ethereum is undervalued and really interesting. And then after that, we'll talk to Joe and ask a few questions. And then after that, actually open it up to the audience to ask some questions. So first off, I think the way I think about it is when Bitcoin came out, it enabled this trustless value transfer. It solved the problem of how do you send money on the internet in a way where there's no trusted middleman, where somebody can't counterfeit money or spend the same money twice. And not a whole lot changed until Ethereum came out. And Ethereum launched in 2015. And what Ethereum added is it added the ability to program the money, which was a huge, really important shift, because Bitcoin was just kind of sending money from point A to point B. Ethereum basically opened up an entire decentralized financial system with the idea of smart contracts that allow you to programmatically control what happens to the money stored in them. And if we go to the next slide, we'll talk a little bit about what is decentralized finance. And the way I think about it is similar to how the internet was the underpinnings of a new information infrastructure. Blockchain tech is enabling the underpinnings of a new financial infrastructure. And specifically here, Ethereum is really the main platform that's enabling all this. And if you think about decentralized finance, it really has 5 components. You need a unit of account, you need some currency to trade in, you need exchanges to actually trade assets, you need assets to trade. So this is where lending protocols come in with issuing debt. You also have new cryptocurrencies and tokens that people are creating. Most of them surround financial products in the crypto ecosystem. Eventually, in the long run, I think we'll see use cases that involve kind of the external world more. And then the last 2 components are margin and leverage. And so people tend to have a negative connotation associated with these 2 components of finance. But the example I always like to use is, if you're a currency and you want to hedge, dollar yen, doing it at 1x leverage is extremely capital inefficient. And so there are, valid use cases for margin and leverage that aren't, crazy going 10x long on some asset and basically, gambling your money. And so if we look at the DeFi landscape, what we basically see is at the very bottom, you have base layer blockchains, which people build things on top of. And one layer up, you have these things that are called oracles. They basically solve the problem of how do you get real world data into this new financial system. There's times where you might need to know the price of an asset to resolve some derivative contract, or you might need to know the outcome of some real world event if you're resolving a bet. And then one layer up from that, you have the actual protocols. These are the things on Ethereum that are getting a huge amount of usage today. Projects like Maker, Aave, and Compound on the lending side. These let you basically take out a loan, 24/7, 365 days a year, at any time that you want. There's no bank holidays in DeFi. Then you have decentralized exchanges that allow you to trade, predominantly cryptocurrencies today. And those are great because in many cases you actually get better rates and lower fees than you do on centralized exchanges. Just about a week ago, I was looking at USD, USDC rather on Uniswap and comparing that to the ETH Coinbase book. And the Uniswap one was actually more liquid, up to $1 million. There was more liquidity at a better price on Uniswap than there was on Coinbase, which is a huge shift that most people in the space might not have even thought was possible anytime soon, just a bit over a year ago. And then as you kind of get up the stack more, you have things that involve multiple protocols. You have decentralized derivatives exchanges, and you have wallets and aggregators that interact with a bunch of protocols. Yearn.finance is a protocol where you give it money and it allocates it to try to earn you the highest yield. Aggregators like 1inch and Matcha basically take your trade that you want to do and route it across 20 to 40 different decentralized exchanges to get you the best price. So people are building things that are touching the end user at this point. And I think that's going to continue a lot over the course of this year. The next thing that we wanted to go over quickly is kind of looking at what happened with the GameStop incident. And so if you're familiar with kind of the concept where GameStop had this massive short squeeze brought on by the Wall Street Bets crowd, where they basically squeezed a bunch of traditional hedge funds who had massive short positions on GameStop. There's a few interesting things that we kind of take away from that. One is that trading apps like Robinhood aren't free. Their primary customer is not just the user, but also firms like Citadel, where they're selling your order flow. And so it's so that kind of stuff in DeFi, everything is open source and public. So everyone's playing by the same rules, which I think is really interesting. The next piece that's interesting about DeFi is there aren't these problems that you have with like clearinghouses or settlement or T+2 or the time for a bank wire to process. That stuff just doesn't exist. When your trade happens, it's processed. The trade is the settlement. There is no clearinghouse really. It's just a smart contract, and it's all globally accessible and operates 24/7. There's no bank holidays. There's no trading hours. It's always open. And the last couple of things we'll walk through before open it up to the discussion with Joe is talking a bit about what sort of growth have we seen in DeFi. So one is value locked in DeFi. This is how much capital is being utilized in these smart contracts. It's currently around 40 billion or so. 2 years ago it was a couple hundred million. A year ago it was maybe a billion, and so it's just growing rapidly, and it's continuing to grow this year pretty rapidly as well. Next up, we have decentralized exchange trading volume. And so this is volume that's happening through these decentralized exchanges as opposed to centralized venues. And in January 2020, it was very low, tens of millions. In January this year, 2021, it was about 62 billion. And so this number is just exponentially growing. And especially as things like Ethereum scale, I don't see this growth really slowing down. It's going to be a huge shift. Where if you remember, years ago, crypto trading shifted to exchanges like Binance, where people would trade crypto to crypto on exchanges like Binance. Now I think most of that trading is eventually going to happen in DeFi, which is really exciting. Stable coins are another huge use case, and pretty much all of these exist on top of Ethereum. You have things like Tether, USDC, ones like DAI that I think are actually more interesting because they're decentralized. And so DAI is actually a stable currency issued using Ethereum Ether as collateral. And so I think that's like a really interesting dynamic because it allows you to have basically a currency that's stable with respect to the dollar, but you don't need the traditional banking system to do it. And then, if you look at Pantera, the way we're positioning ourselves is we think that, things like decentralized finance, smart contract platforms like Ethereum, we think those are going to outperform Bitcoin in the long run. And so we've positioned our funds accordingly. Our liquid token fund has about, a quarter each in lending in decentralized exchanges, about 10% or so in miscellaneous DeFi assets, and about the remaining 40% or so is in layer ones, predominantly Ethereum, and then followed by that Bitcoin. And then this is a chart of Ethereum versus Bitcoin dominance. And I think, what's kind of just started to happen recently is Bitcoin dominance has started to fall. It peaked at 72% that over a month ago, and we think that that's going to continue to decline. If you look at the 2017 chart here, you can say that Ethereum got pretty close to flipping Bitcoin in terms of market cap, and we think the chart's going to look very similar to that as the year continues. We're very bullish on Ethereum on a relative basis. And so, in summary, the growth of Ethereum and everything that's happening on its platform is really promising for Ethereum's long-term value. We think the primary driver of value from the space is going to be decentralized finance. I think it's, digital gold is great, but I think decentralized finance is what can really transform the world and the way society works. And the way I would sum up why we think Ethereum is undervalued on our end is, it trades at a price to sales or a price to revenue ratio of about 40, which will become earnings for Ethereum stakers when Ethereum 2.0 launches. One thing people say a lot is they say, well, fees are really high today, fees are going to come down as Ethereum scales and capacity goes up, which is true, but usage is going to go up when capacity goes up too. The reason fees are high right now is because usage is hitting the capacity limit. And as you keep raising the capacity limit, usage is going to continue to increase. And so even though the fee per transaction is going to decline, the total amount of revenue generated by Ethereum, I think, is going to go up. The people who say it's not, it's sort of like saying, oh, you only need 32 megabytes of RAM or something. The amount of RAM devices used just continues to go up, and I think the amount of things people will find to use Ethereum for is going to continue to go up too. The next thing is just the rapid growth of it. Revenue, to miners has grown 400x since January 2020. Ethereum itself is at the forefront of DeFi. Pretty much all the value in DeFi is transacting in smart contracts written on Ethereum. And then with Ethereum 2.0, that's going to bring a lot more scalability to Ethereum, which enables a lot more kind of practical DeFi use cases, which I think is just super exciting. In my view, we haven't really seen anything yet. This is just the beginning. And so with that, we're going to have a panel discussion with Joe Lubin. My partner Paul is going to hop on as well, and I think he's going to actually ask the first few questions.
Hey guys, this is Paul. Glad to be here and really excited to have the discussion with Joe Lubin, co-founder of Ethereum and founder of Consensus. And, I've known Joe since pretty much the beginning of how a Consensus started. And it's been a wild ride to sort of see Consensus be less than 50 people and, up to a certain point, a global organization that had over 800 people. And Consensus has been really just building the essential infrastructure for Ethereum applications and enterprise to really get started and thrive on Ethereum. And so, really excited here to chat more with Joe about the start of Ethereum and really kind of where he sees it going. And Joey and I will be going back and forth with questions. And then, of course, we have the Q&A box. So if you do have questions, feel free to ask them and we will get to them. So looks like Joe may have dropped off. So we'll kind of give him a second to jump back on.
While we're waiting for Joe to join, maybe we can talk a little bit about kind of the early days of Ethereum and kind of how it's evolved. I remember back in 2015 when Ethereum came out, people didn't really do much on top of it. People made some like dice roll games. There wasn't really a whole lot you could do. And then that really all changed when MakerDAO launched in late 2017. And that opened up the ability for people to basically do collateralized loans, borrowing a stablecoin against their Ether. And that started getting a lot of usage very quickly. And after that, we saw applications like Compound launch. Eventually, we saw Uniswap launch. And I think that was sort of a watershed moment for DeFi, where it was really convenient. You could do a trade without needing to withdraw money to an exchange, wait 30 minutes for it to confirm, withdraw money back out on the other side. It was just a lot more convenient than other alternatives, and that basically spun up a huge kind of boom in DeFi. More and more people started launching applications, and then now, if you fast forward to today, there's tons of new applications being built on Ethereum every day. Tons of usage of DeFi applications, predominantly decentralized exchanges and lending protocols. I think the next big use case that we haven't really seen yet, but that will take off soon, is decentralized derivatives exchanges. So think things like BitMEX, but decentralized versions of them. I think that's going to be a huge use case. There's also a lot of questions in the chat while we're waiting for Joe to join back about why do we have conviction around Ethereum specifically? Will its high fees force people to move to competing smart contract platforms? I think ETH has a huge network effect because of all the applications that interact on top of it. I think it's actually going to be very difficult for other blockchains to get usage unless they build themselves a bridge to Ethereum. So if you look at Polkadot, I can see that getting a lot of usage because they're building things that are Ethereum compatible and they're building bridges to it. So you might, if you have an app that doesn't need to interact with a lot of other things, you might use Polkadot for like some really, high frequency trading use cases or whatever, and then go back to Ethereum for sort of final settlement. I can see that kind of stuff happening, but I don't think the DeFi, ecosystem is going to migrate to another chain. I think you'll just see different applications get launched on other chains, and you'll see a lot of things that interact with Ethereum as opposed to trying to compete with it. But I'll go ahead and ask the first question.
Okay.
And it kind of starts with the early days. Basically, the question is, what was the initial objective when building Ethereum, and how do you think about that narrative, and how has it evolved over time?
So Vitalik was working on a handful of projects, for the Coin magazine and developing deep expertise for that technology. He was working on Mastercoin and some other projects, some colored coins projects, and he basically felt that launching a new cryptocurrency was unnecessarily expensive and complicated and time consuming. So if you wanted to launch something like Litecoin, you'd basically fork the whole Bitcoin code base and make your changes. In Litecoin's case, it wasn't too extensive a change, but in other cases, would require significant modifications. But more importantly, you'd have to excite a whole lot of people and build a whole ecosystem around your cryptocurrency. So his idea was wouldn't it be great if there was this platform on which you could create a whole bunch of cryptocurrencies just by changing a little bit of code, and the whole infrastructure and community would be there? And B, wouldn't it be even greater if that platform had a virtual machine and an expressive programming language, so that in contrast to the limited things that you can do with Bitcoin scripting language, you could build anything that you could dream of, provided scalability and other little issues like that. And so because the language that the Ethereum virtual machine and the programming languages ended up being so expressive, we started realizing that, hey, we can do a lot more than just build new cryptocurrencies on this thing. And so we had a conference in Toronto in the early months, and we printed up t-shirts where, yes, there was a new cryptocurrency, but also there's a few lines of code on the back of a t-shirt for Dropbox and a few lines of code for a name registry. And so that was the primary narrative, cryptocurrencies, but because of the expressiveness, we and others started thinking about the world computer narrative, where the vision of an always-on world computer that people could access for a wide variety of things from anywhere. So that vision is likely to be fulfilled, not by Ethereum alone, but by lots of interoperating decentralized protocols. What we like to call Web3. And along it all started with currencies. But the DeFi narrative has expanded tremendously. And the DeFi narrative is, I think, been enabled by this notion of a trust foundation that decentralized protocols enable the characteristic of trust, automated and objective trust, rather than the kind of subjective trust that we've been used to for millennia. And so based on this new foundation for automated and objective trust, we can build a new financial infrastructure, sort of global digital asset settlement layer. And as we build out lots of functionality, lots of decentralized finance protocols that all interoperate with one another, we're building a broad and deep financial infrastructure for the planet. And upon that, lots of the world's systems that we rely on currently or will rely on can be eventually built on sturdier foundations.
Great, thank you so much, Joe. In terms of, one of the topics of this call is around why Ethereum is underpriced. Can you tell us a little bit about why Ether has value and what its role in the Ethereum network is? And I'm sure it's going to change, as we head into Ethereum 2.0. But yeah, tell us about the value of Ether and its role.
Sure. So I guess the main reason that Bitcoin and Ether and other cryptocurrencies have had value early on is that they represent a store value or means of payment, but in a very speculative context, because these systems are still quite young. And the massive value propositions are materializing now, but are certainly going to grow. A little more concisely, Ether is being used to power programs and to store data, but it's also being used to stake. So for Ethereum 2, for staking and DeFi, there are literally millions of Ether being locked up in protocols on Ethereum 1 and for the Ethereum 2 beacon chain. So it's being used in pretty enormous quantities, around 20, it's about 5 times larger in terms of dollar value of fees compared to Bitcoin on a daily basis. I think it's around $27 million in fees are being generated each day. And even the top 3 applications on Ethereum equal all the fees that are generated on Bitcoin. Finally, Ethereum 1559 is coming, and that's a protocol that will enable a much more effective fee structure that will enable better scalability and better availability. So you'll be able to pay a fee to make sure that your transaction gets into a block pretty quickly. And that's going to have a side effect of burning a fair amount of Ether. So the narrative that Ether's monetary base is uncapped is probably going to go away. Essentially, it will be a quasi-stable equilibrium, most likely, or deflationary.
Awesome. Thanks for that. The next question we have is, of the consumer use cases being built on Ethereum right now, what ones are you most excited about?
As you can probably tell, I'm really excited about DeFi. DeFi is just an astonishing innovation. The web and internet protocols, but really the web represented the democratization of access to information globally, of the ability to publish information, of the ability to stand up e-commerce or engage in e-commerce, of the ability to stand up or engage in social networks. So that sort of power of democratization is being brought to the financial infrastructure. The financial infrastructure hasn't really been changed that much by the internet until recently, where replaced by rather than phoning your broker, you hit a website. But real deep infrastructure changes are now possible because we're creating money on decentralized protocols, whether it's stable coins or Bitcoin or central bank digital currencies. And we're creating these financial protocols that snap together like Legos for lending, borrowing, insurance, equity issuance, bond issuance, automated portfolio management, and so many more use cases. And the financial infrastructure is being built by innovators. It's being built by technologists and entrepreneurs. And it's enabling use cases like flash loans that are astonishing and have never really been thought of before or possible before. And I am confident that modulo some discussions with regulators in different countries, it's going to bring in tremendous value creation. Basically, we're moving from an analog and friction-filled society to a natively digital society, and that's going to enable us to squeeze all the frictions and delays out of our economies and just drive tremendous value. DeFi is going to enable the world to re-architect its systems again, because it needs that financial infrastructure to sit on. Another incredibly exciting use case that is possibly going to be bigger than DeFi commercially is NFTs, non-fungible tokens, basically creating digital representations or certificates of ownership for lots of different things in the world, whether they're natively digital, like digital art or music, or whether they represent physical objects in the world. NFTs are a part of DeFi. They will implicate DeFi in some use cases, but they're also just going to be relevant to so many more people. So NBA Top Shots, I collected hockey cards and baseball cards growing up, so there are just going to be so many use cases in art and music and collectibles, and people like collecting things and organizing things as a species.
Awesome. Yeah, I agree. I agree with all that. I definitely agree on the DeFi stuff. I think NFTs are really interesting. I guess the next question we have is, how do you think about the competitive landscape of, Ethereum competitors, projects like Polkadot? How do you view those? How do you think they fit in? What are your thoughts there?
Well, there have been so many Ethereum killers over the years, and there really was no competition for a very long time. But now there's some good projects that are emerging and gaining some solid traction. These projects still are really very immature. They still have tiny ecosystems in comparison to Ethereum. They have not great developer experience. They have minimal infrastructure, but I think they're playing an important role. Ethereum is doing astonishingly well. It is experiencing lots of growing pains. These are good pains to experience rather than the kind of pain that you might experience if you built something that you think is cool and nobody else thinks it's cool. But growing pains, growing pains combined with real desire to utilize a system bring lots of capital into the context, and humans are really good at what they think is valuable. So Ethereum has a lot of scalability projects underway, some of them coming online. And really some of those scalability projects are just other protocols that are bridging to Ethereum. Some of them may end up anchoring into the Ethereum trust layer as layer 2 protocols. And I'm really quite delighted to see different projects gaining maturity and expecting the internet or interoperating different protocols for different purposes, subserving different niches. So it's on. Ethereum is moving rapidly towards scaling, and other projects with some scalability. I think Ethereum has as much scalability right now as any other project. If you think about the layer 2s that are already online or that are about to come online. But it is, I guess our work is cut out for us, and other protocols' work is cut out for them, and we're seeing lots of collaboration across the ecosystem. So we at Consensus are involved in some of that.
Got it. Actually, on the note of scalability, could you talk a bit about Ethereum 2.0, like its timeline and what effects do you think that will have on the ecosystem?
Sure. So Ethereum 1 was expected from the start to be prototype is too strong a word, but the first viable demonstration of a decentralized protocol system that is extremely expressively programmable. We ended up standing up something remarkably capable. We intended in the first few days that I was involved in January 2014, we were very interested in proof of stake. We mentioned that we probably needed sharding at some point. But I think we did a pretty good job of winnowing down the vision and building something that turned out to be really interesting and valuable to many people. We were under no illusion that it would be that it would have the scalability that we would need in order for it to grow to be globally systemically important. With layer 2 solutions, it's doing a pretty good job. Ethereum 2 has been long in the making, essentially because it went through different iterations with respect to architecture, and a lot of that was about designing a proof of stake system that squeezed out all the different vulnerabilities that we were aware of. Vitalik has a tweet storm, maybe 80 tweets, something like that, describing his journey, the journey of a bunch of people, pretty much led by Vitalik, to identify all the vulnerabilities and squeeze out all the vulnerabilities. And we built a much better consensus formation and anti-Sybil system than I believe any other out in the world, which will enable so many more people to have low barriers to entry to become validators on the network. And in fact, phase 0 of Ethereum 2 is operational. It's been working like a charm, and I think it has more than $5 billion worth of Ether staked on it at this point. So phase 0 is basically the heartbeat, the beacon chain of the system. And phase 0 has most of the complexity built into it. So I expect phase 1 and 2 in their first rollouts to be relatively less painful or less difficult than standing up a whole new blockchain with a brand new technology. And so current the current plan is to focus on phase one, which is to add sharding, basically data availability layer to Ethereum 2. The current phase two has this notion of execution environments. And I do expect that some of that will emerge over time, but the focus will be on using phase one data availability to supercharge the layer two roll-up system. So layer twos are networks that lots of projects are building on for scalability, exchanges and games and other projects. And so layer two works really well on top of Ethereum 1. It'll work even better on top of Ethereum 2. And we are going to see Ethereum 2 as it matures, essentially turn around and absorb Ethereum 1, the network that gave it birth by facilitating staking. And that's going to look like a merge. It's going to look like Ethereum 1 just becomes an environment that operates on Ethereum 2. It's neck and neck right now, as far as I can tell, and I talk about this relatively regularly with colleagues, whether the sharding will happen, enabling scalability with layer twos, or whether the merge will happen, bringing Ethereum 1 into Ethereum 2.
Awesome. Thank you so much, Joe. Really excited about Ethereum 2.0. I guess another question that we have is around Ethereum as an asset class for institutions and potentially even corporations. You know, I think we're starting to see that narrative this year with Bitcoin, where institutions are coming into our funds looking to get exposure to even Bitcoin specifically. And then of course, MicroStrategy and Tesla are seeing Bitcoin as a way to store value from their treasury. Do you sort of see the same for Ethereum, and what does that look like in terms of the timeline?
Yeah, things are really heating up on the enterprise front. So we have entities like PayPal and Visa making use of digital assets, cryptocurrencies. Michael Saylor has done an amazing job of researching how one might line their treasury with Bitcoin and laying out all of the thinking and strategies and procedures, I guess, to enable organizations to do that. All of that is applicable to Ethereum, and we've been talking about it internally about how we might present a much more compelling case for organizations to hold some Ether. So it has all the benefit of holding Bitcoin on your balance sheet, but Ethereum is just so much more functional than Bitcoin. We have a protocol that we built with Ernst & Young, and Microsoft supported a bit, called Baseline Protocol. Baseline enables systems of record inside organizations to sync up agreements, business processes, data across organizational boundaries, and to use zero knowledge proofs to keep them in sync on a frame of reference, like a public frame of reference, like Ethereum mainnet. So Coca-Cola bottlers of North America are building an exciting system using that technology. And there's a whole bunch more projects coming down the pike using that technology. The advantage of that technology is that it enables systems, and they can be databases or blockchains or spreadsheets inside organizations, to stay inside organizations and not have sensitive data exposed to public mainnet. And so it's really just the zero knowledge proofs that find their way onto Ethereum and keep everything in sync. Our Infura infrastructure service is offering something called ITX right now, Infura Transactions, which is enabling organizations to not worry so much about gas payments and gas dynamics, and very soon not even worry about having an Ethereum wallet. So currently, Infura can pretty much guarantee that your transaction happens as you want it to happen. There are lots of pitfalls on this young technology. Sometimes transactions stuck for different reasons, and nonces or the sequencing of transactions lose order, and it requires a little bit of fixing. So Infura Transaction Service takes care of all of that and pretty much guarantees that what happens is what you want it to happen, and happens at a much lower gas price. Very soon, currently you have to pay in Ether, but very soon you'll be able to pay with credit card. So it makes it much easier for enterprises to get on the system and use the system. And this baseline protocol and other activities are going to open up DeFi to organizations. Organizations are going to find new financial protocols that enable them to wire up or to construct financial instruments on their own, to issue tokens on their own, to wire up financial flows without relying on financial intermediaries or minimal reliance on intermediation. And so Baseline plus DeFi will be bringing organizations to Ethereum. It's inevitable. It's where the money is. It's where the liquidity is going to be, and the ease of taking control of your own financial destiny. Yes, it's still the Wild West, and yes, these systems are still sharp around the edges, but the potential is just so awesome that many will come very soon. So I expect lots of enterprises will be using Ethereum DeFi, and we'll see that over the next 12 months.
Thanks, Joe. That's really promising. You know, I still remember when you guys launched the Enterprise Ethereum Alliance, and when you guys, you know, started to incorporate zero knowledge proofs. You know, really felt like that was the start of just kind of getting these guys more involved. And I really do think data authenticity and privacy across organizations is a very strong use case. I got one more question, then I'll throw it back to Joey. You touched upon this a little bit, but you know, hurdles to Ethereum achieving mainstream adoption. You know, I know that scalability and gas fees are probably up there, but you know, what sort of hurdles do you see that Ethereum needs to achieve, and even more specifically, maybe even touching upon some of the regulatory hurdles for, you know, Ethereum going forward too?
Yeah, so it's been usability and scalability for a long time, and you nailed it. Regulatory certainty. So corporations don't do well in environments of uncertainty, and especially perhaps regulatory uncertainty. Those issues on the security side, I think, have been significantly addressed. The SEC has done reasonable things. Some might argue with that, but I've been reasonably comfortable with their approach, and we understand it at Consensus, and we're happy to, we can navigate that and issue tokens that we believe are utility tokens, and we've clear expression on what they can do and what they can't do. Utility tokens that aren't seen as securities should be about utilization rather than speculation. And the Office of the Comptroller of the Currency did our industry a couple of solids recently in writing a letter indicating that financial institutions like banks can custody digital assets like cryptocurrencies. And more recently, they indicated that those same institutions can use our financial rails, can use Bitcoin rails, Ethereum rails, and run nodes and transact and things like stablecoins. So pretty good opening. The new administration, Gary Gensler, is very well acquainted with the technology, and so I don't anticipate difficult regulatory hurdles going forward. Though decentralized finance is going to be really interesting. I think it will be incumbent on the developers of decentralized finance protocols to understand the law well with their legal counsel and to build protocols that that enable them to operate without breaking any laws, meaning if certain laws are focused on protecting the consumer from custodians, if you build your system so that the assets are self-custodied until one engages in a peer-to-peer interaction, then you're basically compliant with law. And you've built a very useful system that is probably more valuable to people and organizations than the existing intermediated infrastructure. Scalability is being addressed. We're going to see lots of applications making use of layer 2 technology and just bringing their games or their NFT systems to the world, and usability is getting addressed. Our wallet system has around 1.6 million monthly active users, and a bunch more less active than monthly. Our infrastructure, so our wallet is MetaMask, and our infrastructure element in Fura is providing things like transaction services. We're still pretty heavily focused on enabling developers to make use of the technology so that they can bring the consumer, but we're focusing on usability for the consumer as well, and it's starting to make a real impact.
Great. Yeah, thank you so much, Joe. I think that makes a lot of sense. I think Ethereum is done and is further along on the regulatory side than a lot of the other cryptocurrencies, and I think that'll bode well for institutional adoption. I think, Dan, did you want to wrap up the discussion here?
Sure. Joe, thank you so much for joining us. It's been awesome. It's been fun to watch you build consensus. It's really exciting things that you're doing. Thanks for joining us. For the rest of the participants, we just want to wrap up with an overview of our funds and then wrap up the call. On the next slide, we have our fund performance recently. Obviously, the market has been very strong, but our view is Ethereum is going to outperform Bitcoin, and then protocols built on top of Ethereum are probably going to even outperform those, Ethereum itself. And so our early stage token fund that invests in these protocols, particularly DeFi, has done even better than the one that invests in Ethereum and Bitcoin, the liquid token fund, and that's done better than Bitcoin itself. And then we have an overview of the fund itself on the next slide. The liquid token fund invests in about 50 different liquid tokens. It's set up as a long short hedge fund, but for the next couple of years, while the market's rising to the equilibrium price that we think it's going to attain, it's going to be mainly long. But it does add quite a bit of alpha by picking the right tokens to be in at the right time. And then whenever we think we've hit a bubble top in this cycle, we will try and reduce risk and get our net exposure down quite a bit before the market rolls over. As an aside, we still think we have a good bit of ways to go. The market's kind of in the middle of this bull market, and we don't feel like we're right at the top yet. And then our early stage token fund invests in those projects prior to them going public. So it's like a pre-IPO fund or a venture or private equity fund that invests in tokens prior to them becoming public. Prior to 2017, those used to turn over every 3 or 4 months. Now, Joe was talking about the regulatory scrutiny from the SEC. People de facto act like things are securities, so they typically take a year to turn over. And so this fund has a quarterly liquidity structure, but with a 1-year notice period. The liquid token fund is just 65 days notice, so it's very, very liquid. And then our last fund offering is Pantera Bitcoin Fund. It seems super obvious that having Bitcoin funds be different, but they are actually really different. Our fund offers daily liquidity and much lower fees and better performance than any of the funds in the United States. It's massively outperformed most of the funds on the market. Partly because it doesn't charge any premium to NAV, so investors always come in at the valuated average price for the day and come right back out any day later at the average price for the day. The last slide is just an overview of our funds as a whole. The Bitcoin fund takes subscriptions any day, any US banking day, and is available to investors all around the world and no lockups. The 2 hedge funds take subscriptions at the end of every month, and then quarterly out for the liquid token fund, and then a 1-year notice period for the stage fund. So with that, we wanted to let those of you who need to run on to your next meetings get going. But the investment team would be able to answer a few more questions online as we wrap up. Thank you all so much for joining the call.